keeping you informed with news that matters. Fox 40 News at 8 starts now.
We have a busy hour planned for you during this 8 o'clock newscast. As we were looking at mortgage rate trends for 2022 and to get you into buying a home, possibly also refinancing, we're seeing those rates rise. Now with the Russian-Ukrainian crisis, all of a sudden we're seeing a slight dip. So what's going on here? And could this be an opportunity for people to get lower interest rates? The key will be timing, trying to take advantage. We're going to talk to our local mortgage experts to hopefully help you save some money on buying a home. Rates are headed up, and so are mortgages. But we're speaking live with a mortgage expert explaining why the trend suddenly changed because of the invasion of Ukraine and how it could be an opportunity for you. That's coming up next. Stocks fall Thursday as Russian troops launch a full-scale attack in Ukraine. Surprisingly, the turmoil could lower mortgage rates in the U.S., and we're seeing it already. Joining us this morning, Brandon Haefele, CEO of Catalyst Mortgage, to explain how an international crisis can impact the price you may pay to get a loan for your home. Brandon, good morning. Mortgage rates were rising steadily to start 2022, but then that suddenly changed over the past few days, and we're seeing a reversal again just this morning. What's going on? We're seeing big-time volatility here.
We really are. In the mortgage market right now, with the geopolitical stuff that's going on, we're seeing interest rates fluctuate to where last Thursday, a cost of a $400,000 mortgage, let's say a 3.5%, might have cost you 1.3 points, to where then yesterday it would cost you 0 points. So you're really seeing a lot of fluctuation with the cost of a mortgage. And it's not about just getting the rate, it's the cost to get that rate really going up and down. And the problem with that is for first-time home buyers or people getting pre-approved in this market, really trying to figure out where their purchasing power is in a volatile market.
And that could, as the stock market declines, temper a bit home buyer appetite for the more expensive or second homes that we were seeing start to rise in interest during the pandemic. And it could also reduce the amount that they have to make that buy in the forms of a down payment.
Well, really, and that's a great point, especially if you're looking to pull money out of your 401k. And let's say in the next 4, 5, 6 months, and we do have stock market volatility, it's one of those things that I would look at pulling stuff out now if you're going to do that for a down payment, or look at the different down payment assistance programs that might be available. But it's important to know that a payment that you were quoted maybe last week could be completely different this week. And of course, even today, we're seeing dramatic increase in mortgage rates again, starting to spike back up, based off of the Federal Reserve speaking this morning.
Okay, let's go from the buyer standpoint then. Many are looking at this slight dip in mortgage rates as a potential opportunity for buyers. So give us an example on the savings here.
Well, I mean, you're looking at, if you are going to purchase today and you're going to do a 3.5% for, let's say, a $400,000 loan, you're really talking about $100 less if you're going to take a lower interest rate, or you're talking about saving on points and fees. So last week to this week, we really saw a huge drop in cost for a mortgage. And with that being said, that could actually be applied to a lower interest rate, which means more purchasing power, or it could just be less cash out of pocket. So again, each scenario is different, but it's important to really be talking to your mortgage company that you're working with about getting pre-approved and finding out where your purchasing power is and how much it changes week to week.
Brandon, what I'm hearing from you this morning is timing is of the essence. And it's important that if you need to refinance or buy a home, you get some advice now, because as we're seeing just from this morning with our Fed chair speaking and the potential for rising interest rates, not only now, but what does that look like for the rest of the year? And if you're thinking you need some help and some relief in your mortgage, you have to act now and give you a call, for example.
Absolutely. And I would say that, act now and shop around, because right now, with one company to another, pricing can be just such a variable and fluctuate so much. Really want to shop around and make sure that you're actually looking at things today, because even if the Fed raises rates in a couple of weeks, which we do predict that they're going to do, there you go on mortgage, credit card rates. There you go on auto loan. Everything will start going up from that point.
All right, Brandon Haefele, CEO, Catalyst Mortgage, our local mortgage expert. Thank you so much to you and your team for being with us this morning. Appreciate you. Take care.